Welcome to the Earn Your Marks podcast, presented by Pro Exam Tutors, the only podcast you need to pass the CFP exam and become a certified financial planner professional. Here's your host, Sev Meneshian.
Welcome to the Earn Your Marks podcast. I'm Sev Meneshian, certified financial planner practitioner, lead tutor, and the founder of Pro Exam Tutors. Now, in today's episode, I'm going to talk about the investments portion of the CFP exam. Now, a lot of you that are sitting for the exam come from an investment background or are in a position where you're advising on securities, and that's a pretty good background to have, but you got to understand that you're going to have to learn and retain information about investments that you haven't used before, and you may never ever use in your career, but you have to know regardless if you want to pass this thing. I've given this example in a podcast before, but it wasn't my original intention, or at least consciously, let's say, to go into financial services. I actually went to flight school for a couple of years thinking that I was going to be an airline pilot. The reason I bring that up is in flight school, they didn't teach us initially how to navigate using a GPS. We were taught to navigate using an old school paper map and a flight calculator, believe it or not. Now, the reason we were taught to use those archaic or seemingly archaic tools is because it taught us the finer details of navigation, which presumably led to us becoming better pilots. And the same thing goes for the CFP exam. You don't have to become a chartered financial analyst in order to pass the CFP exam, but you have to know a lot of the topics that CFAs learn about. And in the end, I think we can all agree that doing so does make us better planners and advisors. So what I'm going to do in this podcast is just give you an overview of the investment topics that you have to know for the CFP exam. All right, so first things first, when you're starting out in your journey on studying, or if you haven't passed the exam in the past, that's okay. That's why you're allowed to take it up to 5 times. If it didn't work out for you, go back to the areas obviously that you didn't do well in. Maybe investments was one of those areas. Maybe it was one of the areas that you did do well in. Regardless, you should always go back to all of the different areas. Okay, but starting off, let's look at our securities markets and money market instruments. First of all, you want to know that as far as money markets are concerned, there's a difference between a money market savings account or a money market account, let's just say, and a money market mutual fund. Different characteristics, and I would bet, there's no way for me to know this, but I would bet that the exam is going to test on those differences, or they certainly can. But we want to know about the creation of securities. What are some of the acts or the laws that came about right around the Depression time to help with the transparency of issuing new securities, or the oversight of existing securities, or of firms, or of advisors? So the different acts of 1933 and 1934, 1940, and so on. You want to know those in great detail. We also want to know about the markets in general, how they behave, why they behave the way that they do. You could be tested on the different types of cash equivalents that are out there. So, for example, if we are going to advise a person or a couple on how to best plan for a rainy day or an emergency fund, do we just use cash? Can we use cash equivalents? Can we use CDs, which would be considered a cash equivalent? But it depends on the holding period of those CDs. All right, so again, some finer details there that you'll have to know. You certainly will have to know a lot about debt instruments, or let's just say bonds in general, and what happens to bonds when interest rates change. And you'll be tested on what the value of a bond will do if interest rates go up, as they had been. Looks like interest rates at the time of this recording, of course, have stabilized, but in the last couple of years, interest rates have gone from basically zero up to very, well, let's say not very high amounts, but let's just generally say, around 5% or so. That's not going to be totally accurate, but it's in the ballpark. Now, if interest rates start coming down, what will bond prices do? Well, we should know that bond prices and interest rates move opposite of each other, but the board might be interested in having you calculate by what degree those investments, those bonds are going to go up or down. Right? We'll also look at bond trading, some of the strategies that are involved with trading bonds, and how, speaking of interest rates, how yield curves impact a bond investor's decision making. And finally, not finally, but we should say if we move on to things like stocks, we need to know the characteristics of stocks and preferred stock. And is a preferred stock a debt instrument, or is it more of like an equity, or is it a combination of the two? If I have a convertible bond, into how many shares can it be converted into, and is it a good idea to convert a bond even? Right, so that's something that can be presented into a question. We'll look at the taxation as well. Now that will be for another podcast, our podcast on taxes. But taxes, it seems like in the CFP curriculum, touches every one of the modules. So if there's one area that you are going to focus a little bit more on than the others, tax might be it. Also, consistently, I and our other tutors over the years are consistently hearing that, taxes is my worst subject and I can't understand it. And then we just come back and say, look, you don't have to become a tax expert, but you have to know that taxes do touch stocks and bonds and estate planning and retirement plans and insurance. All right, so that's a different topic for another day. You'll want to know about mutual funds and exchange traded funds and separately managed accounts and UITs, and for what type of client those different types of investments or categories are suitable for. And speaking of mutual funds and ETFs and UITs, how do we go about and select those? How do we look at the performance of one manager versus another? If one manager of a mutual fund returned, I don't know, 15% last year, and another manager only returned 11%, should we jump on board with the manager that earned 15% as opposed to the manager that only got 11%? I don't know, maybe, but is there a way to measure if that manager that did get that 15% return took way too much risk for your client's appetite? And on a risk-adjusted basis, did the manager that only earned 11% actually outperform the manager that got 15%? So again, those are some of the finer details that you'll have to know, and you're going to fold in topics like the Sharpe ratio and Jensen's alpha and the Treynor ratio, the coefficient of variation, what these different ratios are telling us, or these different figures that you're going to have to calculate. What are they telling us about the manager? All right, did he or she earn their keep by getting a 15% return? Well, most people would say yes, but if we compare one apple to another apple or a different type of apple, which one is more preferable based on the client's risk appetite? Okay. So anyway, those are some of the things that we'll have to know as far as our equities and our debt instruments are concerned. We can also fold into the mix real estate, and if we have so much rent coming in, regardless if we have a mortgage or not, should I buy this piece of real estate, and how can I figure that into my calculation, or how can I actually value a real estate investment based on the rents coming in, and maybe we're charging for laundry, or we're charging for something else there, parking, what have you. Okay. Another area or areas are options and futures. Now, options, it can be very difficult for a lot of students unless you come from that background. It's possible that you don't even, that the way that you manage your clients' portfolios, or maybe your manager, the way he or she manages portfolios, they don't use options, so you don't have that familiarity. But there are ways to handle those type of questions, and you might get, I don't know, 5 questions on the board exam. You might get 20 of them. I doubt that high, but I mean, if the board really wanted to, I guess in theory they could ask you 170 questions on options. I don't think that's going to happen. That's not realistic, but that's just to illustrate a point, is that you've got to know options. Now, you take the board exam, you might only get one options question. All right, that's fine. You only got one. That's not wasted time, because then when you're having a conversation with your clients or your colleagues, at least you know that you can speak with some degree of authority. I did mention that there are ways to measure the performance of fund managers, and you can also look at how funds are performing, or how risky they are, I should say, just by going on simple websites, like Bloomberg or Yahoo Finance, and you can look at concepts like risk and return concepts such as beta and standard deviation. What do those mean? Okay, are we looking at total risk? Are we looking at risk just specific to an investment? And so there are some heavier calculations, or maybe more in-depth calculations, that we have to do involving beta and standard deviation. We might need to know something like, if an investment earns, if its average return is 10% and the standard deviation is 5%, well, what are the chances that this investment is going to return less than 5%? And there's a fairly simple way that I'll illustrate one day on how to answer that question, or that type of question. Okay, so we've got our risk and return that we talked about, beta, standard deviation, our ways of measuring performance, ways of measuring investment returns, and you will also be studying quite a bit on CAPM, capital asset pricing model, or this is our expected rate of return. And how do we calculate that? Now, is the board going to ask you and give you some figures and have you plug in a bunch of numbers into your calculator, or use your formula sheet for a basic question and answer? Yeah, I don't think so. Maybe when the exam was 10 hours long, maybe that we were asked to do that. I can't even remember. It was a while back, but they'll ask you to calculate the CAPM, I assume, and then plug that into another formula, or use it to see if one investment is superior to another based on what the client has told you how he or she wants to be, or to what degree he or she wants to be risky, let's just say. Okay, so that falls under our performance measures category. CAPM will be part of that. I did mention Sharp and Treynor and Jensen. Now, going back to bonds just for a moment, is that bonds, you most definitely have to know your different calculations around bonds, and no surprise here, we have to know how taxes impact different types of bonds. If we have a zero coupon bond, is that going to be taxed to us? If we have a bond that's a muni bond that I bought for my own state, will that be taxed? And will it be taxed at the federal or state level? What if I buy a bond from a neighboring state? How is that going to be taxed to me? And again, is that taxed on the federal or state level? Is that taxed in the state in which I bought it? Or I should say, is that taxed in my state? Okay, so a lot of these things you can already see, or you can already know that taxes are going to be part of the investments curriculum. Right now, as you move further into your investments module, you will be getting to portfolio management theory. Okay, so the name Markowitz is going to come up, as it should. The whole thing about buying and holding investments, that was born from this portfolio management theory, okay, or a derivative of it. Okay, or modern portfolio theory. There are things like capital market theory, the efficient market hypothesis. I think that more talks about, if I just throw a bunch of money into the market and close my eyes for 20 years, will I have more money than I started with? And it looks like, at least at this point in history, that the answer is yes. can I beat the market on a consistent basis? Depends on the investor. There are investors that have done that. Just from what I've seen, an overwhelming majority of investors, and I'm talking on the professional level, have not been able to do that. So you always want to have you and your clients watch out for chasing the latest, greatest, hottest investment or investment manager that's out there. Okay. And the last thing that I'll say on the investments module relates to asset allocation. Now, here's the area that you have to put your experience aside. Okay, and I've seen this too in plenty of practice questions. And when I was going through the exam, I didn't always agree with the answers that were presented to me. When we had, say, a couple that was very aggressive and the portfolio might look like 80% stocks in general and 20% bonds and cash or cash equivalents. And I'm saying, well, if they're very aggressive, why do you have that much in cash and cash equivalents? Maybe it should only be like 5% in cash or 10% in cash, not 20%. But regardless, you have to study what you think how the board wants you to answer. You do have to check your experience at the door with certain topics. Obviously, you want to leverage your experience, but you have to fine tune it. Okay, so when you get answers that just don't look right, or this is not the way that you do in practice, that's fine. Just accept it and just temporarily, okay, just temporarily know what the board wants you to know, how they want you to answer questions regarding, for example, asset allocation. Stick with that and when you hit that final submit on the CFP board exam, then if you want, then you can go back to your ways of handling asset allocation or putting a portfolio together or whatever it happens to be. Okay. So hopefully this was helpful. Always a reminder that studying is a significant commitment to, so you got to make sure that you're hitting the books. Focus on the quality of your studying, not so much on the quantity. The quantity is going to be there, so don't worry about that. All right, but do lots of practice questions, and if you haven't done so already, subscribe to our YouTube channel at Pro Exam Tutors for videos on other tips on how to pass the exam. If you found this information to be helpful, please let me know with a like and a comment. I always love hearing from you guys, and I know if you know somebody or a study group that can benefit from this knowledge, be kind by sharing the information with them. And thanks and good luck.
Thanks for listening to this episode of the Earn Your Marks podcast. For more information or to get in touch, visit us at proexamtutors.com.